All right, guys, you asked for it. We heard you. It's the top 5 stocks under 20 bucks. Our Chaos crew voted for this video, and here you have it. We're also bringing back Fat Man Zoom by popular demand. I'm going to kick it over to him actually to get this video started. So, Fat Man Zoom, what is our first stock under 20 bucks?
All right, so our first stock is going to be Golden Nugget, ticker symbol GNOG. Now, this isn't our favorite stock in the online gaming, but we think it's a great buy here under $20, and it just snuck in under the $20 mark. With that being said, this is a recent SPAC play. And it isn't online gaming, but you probably heard about Golden Nugget, the brick and mortar in Vegas. The leadership has done a really smart thing in separating the two businesses. And so actually GNOG only accounts for the online gaming. And it's the only other pure online gaming play outside of DraftKings. And so for us, we think that this is a really good opportunity. These levels are great for this stock. And moving forward, we're bullish on all the gaming stocks in general. So this year should be really good for GNOG. So one to definitely keep an eye on. Brad, what say you?
Okay, so for GNOG, I actually really do like this chart. And this was one that we actually ended up having on our daily watch list as well for our Chaos crew. So if you guys are interested in joining that, make sure you're hitting the join button next to subscribe, or the links in the description. We'd love to have you guys over there. We put out a daily watch list of 5 stocks every single day that we think has a lot of promise and a lot of movement. We've been pretty successful with that. Ask anybody in the crew. So we'd love to have you guys over there. Just hit that join button. All right, so getting onto GNOG's chart, Golden Nugget really does have a good looking chart here. It has really kind of rested down and found its bottom at around $18 a share. If by some chance you get the opportunity to get it down here, I think that's going to bode really well for you. Right now though, it's sitting at 1986. It's a great year if I do say so myself, but looking at this one, I think that if it does end up making a break up over 2151, I think that really could bode well for the stock and indicate that we could see some more upward movement from this. So in my opinion, I think that if you could somehow grab this anywhere in between this 2150 and $18 range, I think you should be in good shape. We love the gaming industry as a whole, but I think that, you know, GNOG definitely has a lot more potential here given where it's come down to. We know we love DraftKings and we love Penn National, but this is one that I think does have a lot of potential to the upside as well. And I'll kick it on over to Fat Man Zoom. He's got a special one for you that's kind of like Stitch Fix for pets. What do you got for me?
The next stock coming in at number 2 is one I'm particularly excited about, which is Northern Acquisition Corp. So ticker symbol STIC. This is a SPAC. They have announced their partner, which is BarkBox. And so although we haven't had the date finalized, we know that this reverse merger will be voted on in Q2. We're waiting for the date. However, now is the time to get into this stock. What is BarkBox? So BarkBox is a subscription-based services for dog owners, and it provides treats and toys for their dogs. We love subscription services, and dog owners love their dogs, and they're not shy about spending money on their dogs. So we think this is a huge opportunity. They already have 1 million dogs as a part of their subscription service per month that have that recurring income, which is something that's big for us. The space is $69 billion. It's a $69 billion market. Do you hear that, Steve King? 69 billion. So the opportunity is huge for this company. They already have solid partnerships. They partner with companies such as Dunkin' Donuts. They're offered in retail locations, and I really love their marketing tactics and strategies. They use sort of a non-traditional approach and to create visibility. So BarkBox is going to be a great play. I think this is going to be one that's going to do really well for 2021 as well, and it should get a move on any time now.
All right, so you guys know that Stitch Fix was one of my most underrated stocks that I said was going to be a solid buy back in April. And this is kind of that Stitch Fix for pets. I think that this is going to do really well as well. I agree with Fat Man Zoom. I think we should see a move on this anytime. And in my opinion, looking at the chart here, it seems as if that bottom support was right around 1244. And I think that if this breaks back up over around 1530, 1540 area, we should see a really nice move. Therefore, I think that even grabbing grabbing it below this $15 range is probably going to bode really well for you. This is something that I think that we should definitely consider getting into ourselves for a longer term play. I don't know if this is necessarily one that I would actually swing shorter term. I think this is going to be something you could accumulate for some time and do really well on this. So STIC, especially if we start to hear word on that merger coming through, could do really well. That BarkBox, I think that you could probably argue that more people would subscribe to something like BarkBox than something like Stitch Fix. People love spending money on their pets more so than they even do themselves. So take a look at this one, see if you see value in it. I think that you will. And let's kick it on over. What's the next stock we got, Fat Man Zoom?
Stock number 3 is GE, General Electric. GE Aviation is the reason why this stock is in here. Now, this one's been around for a long time. A lot of people have been beating this stock down. And aviation obviously is one thing that has been beaten down as a whole. One of their biggest clients is Boeing. And we've talked about this with Spirit Aerosystems, is you don't necessarily have to play Boeing if you don't want to, or if you feel like you're worried about the volatility, because some of these stocks will move along with it, but you don't have as much of the downside exposure to Boeing. GE Aviation, great leadership. We really like this company. We really like these levels. It's not going anywhere. I think it's a great reopening play. And as the whole aviation industry moves up, they stand to benefit. One fun fact I wanted to tell you about GE that you may not realize. Did you know that one of the largest talent pools that Elon Musk draws from for his company SpaceX is none other than GE? So wrap your head around that and what SpaceX thinks about the talent level and the talent pool coming out of GE and what those people could offer that stay around the company. So just something to consider and think about. Brad, let's get into the technicals.
All right, so as far as the charts are concerned on GE, I love this stock. You guys know that I've been talking about this one since it was around $6, and I still love it here. I think that this has a lot of room to run as well. And if by some chance this gives you an opportunity down below $11 and retests that 1050 range, this should do really well for you too. But don't discount the fact that if this breaks back up over $12 a share, even $11.85, which is kind of this area that we have marked here, I like this one a lot. This is one that I think that you could accumulate in this range, and I think it'll do really well, especially if we start to hear more orders coming in for that Boeing 737 MAX. Remember, we've talked about Spirit Airlines a lot, or Spirit Air Systems, sorry, a lot, and GE falls in that same vein. This is one that's going to benefit from the sale of that 737 along with Spirit and Boeing, and this one kind of seems as if people forget about it a little bit, but I like this one a lot. It's sitting at $11.22 as of this recording. If by some chance we get this up around that $12 range, this should start to do extremely well. Fireworks should happen. We see it get above there. So if you're trying to accumulate it between that $10.50 and $12 range, I think that it's going to set you up for some pretty good success and should do really well for you. We love GE. I think if we actually start to see some real movement when it comes to those 737 MAXs, especially if they start getting ordered from China, which is to be expected, we can see GE double from here. And I don't think that's really an exaggeration. Love this stock. This is a great pick under $20. Let's kick it on over and get to the next one, Fat Man Zoom.
All right, number 3. We've got a fan favorite, at least a Fat Man Zoom favorite, and that's Clover Health, ticker symbol CLOV. For those in the Chaos Crew, you already know I'm a fanboy. For those of you who follow me on Twitter, shout out Fat Man Zoom, you already know. Say it with me, people. In Chamath we trust. Listen, this is also a recent SPAC. We think this is a great opportunity, great levels. Healthcare tech company focusing on Medicare. We've said the administration is focused on healthcare, so we should see stocks like this move in the future as we hear more about what the new administration plans to do in this space. We've talked about tech companies and there's been this friction that Clover is trying to address between healthcare traditional insurance providers and their doctors. So this is why Clover was created. And we think that they're going to be able to solve a lot of issues and they're going to be able to grow. And one of the things that I haven't really mentioned as far as Clover is concerned is their leadership as well. To me, they have a really well-rounded team in their C-suite, and they have experience in the medical field, which is great. But then they also have big tech experience with the likes of Google. So when you bring those experiences together, I think it addresses one of the pain points that has historically hampered healthcare, which is they don't know anything about business. So bring in execs that have experience such as Google, and we should have a nice partnership. I'm excited about Clover. Brad, over to you.
All right, so I think that this one is actually just a classic case of buy the rumor, sell the news, but I think that the overreaction is quite severe on this one. We've talked about, and Fat Man Zoom just got done telling you about how strongly we feel about Clover from a fundamental side, but look at this chart as well. We're getting back to levels to where this was at pre-merger, and so I think that before we even knew what exactly this was going to be or the levels that we're sitting at now. So I think that anything down here is probably a good buy. We have, other IPO stocks that are priced higher than this, IPOD and IPOF, and we have no idea what's merging into those stocks. And here we have Clover Health that we actually think is a great company sitting at $14. It doesn't make any sense. Good support here sitting right around the low 13s, 13.15 to be exact. If by some chance we start to see this move back up around 15.80, I think that then we're starting to get some real momentum behind this thing. So accumulating it in between this $13 and $14.50 range, I think is probably going to bode well for you too. But either way, Clover Health, in my opinion, is going to be a great long-term stock, and I think it's absolutely silly that it's sitting down here.
And for our number 5 stock, I bring to you Lotz, ticker symbol LOTZ. Let me tell you about this because this is a new one that we haven't talked about on the channel before. We mentioned pain points for the last stock, Clover. The best companies are able to squarely address a pain point. And while your knee-jerk reaction might tell you that automotive is too saturated, not great margins, what is this used car company going to do differently? I tell you this. What do we know about used cars? So for buyers, they know that if they go private, they will get a better price, but there's concerns around that, right? It might be a little bit of shady. They don't know the person. They don't know the history. So they end up going to retail and paying more. We know that sellers know that if they sell it themselves, they'll make more money than if they just go to retailer, go to a dealership. They won't make as much as if they just sold it themselves. But they don't do it because it's a pain. They don't want to deal with the advertising. They don't want to deal with managing the calls, all that. Enter Lotz. Now, when we talk about this transactional process, you're talking about thousands of dollars between going private and going retail. And so Lotz basically sits right in the middle of that. They take a little bit of cut of that difference and they essentially do the work for you. So it's a marketplace for used cars and they marry buyers and sellers. We think this is genius. This is also a recent SPAC. We can't help it, people. They're just good deals out here. But this, again, removes the hassle, removes the risk. And those are 2 pain points that people have been trying to avoid in the used car space, and Lotz should be able to help that. Brad and I talked about this before. If this is anything like Carvana, we can see a major move. So look out for Lotz. May not seem that sexy, but I'm telling you, this thing might be a runner. What say you, Brad?
I say that Lotz is actually going to be a great stock too. And Fat Man Zoom mentioned Carvana, and I just want to show you the chart on Carvana real quick. If we go back and look at this daily chart, and you can kind of see how much this has moved. $179 since their last quarterly earnings, and went all the way up to 302. Now, this is some of it's fundamental, but also some of this is also industry related. And so some of the points that Fat Man Zoom brought up. So looking at LOTZ as a new SPAC play, kind of comparing it to what happened happened with CLOV, once people found out what it was going to be, they started selling it off. And I think that that's the opportunity that we should look at here. With this sitting around $10, we're getting really close to that default price when it comes to the default SPAC price, rather. So I think this is going to be a great scoop up here. If this gets back up, I would say around 1088. I think that we're going to be in some good shape. Probably start to see a reversal here. Anything in this $10 range, in my opinion, is an absolute steal. Now, I will say that this probably could require some patience because it still is brand new and some people are still a little bit on edge when it comes to the car industry. But I'm telling you, I think that with Lotz coming in and some of the action we've seen in this industry as a whole, I think this is going to do really, really well. So this, in my opinion, is probably not going to be something that I would just hold for a week and expect some big boom. But if you are looking for something to hold on to for the next 3 to 6 months, I think LOTZ is going to be a really great play. Get this up over around 1183, and I think we're going to be in good shape on this one. Should do really, really well. All right, so getting into the comments here from last week's video, if you guys wanted to catch the top stocks that we thought were worth buying the dip on, click this up here. You guys will love that video, especially if you love this one. But I'm gonna get into the comments here just like I normally do. And, oh, you know what? I don't think that's worth reading. I'm gonna pass on that one. What the hell? I'm also passing on that one. Can we get to something that actually, okay, here we go. All right, so Demetrius G says, God, what a, woof. I'm just gonna pass on all of those. You guys are disgusting. Looking at Demetrius, by the way, so Demetrius G says, AMC stock will skyrocket like GameStop next week. Hold the line. And so I wanted to kind of get some context from you guys. Obviously, AMC and GME, it looks as if the show is pretty much over at this point, but I want to get your guys' thoughts on this to kind of gauge where you are, where your head's at this point. Are you in agreement that GME and AMC, those are pretty much done, the show's over, it's time to move on to something else? Or do you think that this is just getting started and we could see GME return back to their $500 highs and AMC will go absolutely insane? I'm really worried about this because I think there's a lot of people out there that are subscribing to that, and I'm not quite sure that we're there. But let me know in the comments. Give me your arguments. Is GME still on the table for a major run, or is AMC going to be next in line as well? Let me know in the comments below. Guys, please like and subscribe. Thanks so much for hanging out with us. We'll see you in the next one. B. Smith is out.